Hey, what's up everybody? It's your mortgage expert Brian McCauley here. So did you ever think paying a higher mortgage interest rate would actually save you money? Stick around. In this video, I'm going to show you how. So we all know the market is shifting to the buyer's favor, but the only downside about that is interest rates have gotten a little bit higher and people are getting a little concerned with a payment shock. So there's something I want to show you in an illustration, which I'll do in this video, of how actually interest rates going up and you spending a little bit more money on interest rates and payments actually saves you some money as a buyer. So here's what I mean. Let's press rewind back to December of last year. Interest rates were at close to 3% on a 30-year fixed. So if you got a house back in December at $400,000, you put 10% down, you were financing $360,000. At a 3% interest rate, your payment would be somewhere around $1,500. Today, if you buy that exact same house at $400,000, your interest rate's somewhere around 5%. That puts the payment about $1,900. So it's a $400 a month difference. That's a big deal. But here's why this market is actually in your favor. First and foremost, back in December in the old days, even if you got a better deal on the interest rate, chances are you were in a multiple offer situation and you had to go above list price, maybe say up to $420, had to waive the appraisal clause, and you'd have to come out of pocket an extra $20,000 cash. So you got to think about that from a break-even standpoint. So if we take the difference of today's rate versus December, that's about $400. However, if you don't have to pay over list price today and you actually buy the house for $400,000, maybe even get a little seller concession, you're gonna save that $20,000 in your pocket that you would have paid back in December. So run the math, $20,000 out of pocket extra, divided by $400 and the difference in the payment, that is a 50-month break-even point. So even though right now your interest rate is a little higher, your payment's a little higher, you're not having to go above ask price and pay that extra money out of pocket. So what it does, it actually saves you money in the short term and the long term. So in this $400,000 scenario, it would have taken you 50 months to get your $20,000 upfront back. That's a long time to recover your upfront investment. So in today's market, even though rates are a little bit higher, because there's a lot more inventory and things have softened, you will have a higher payment, but you won't have to come out of pocket that extra amount. The second piece about that is outside of, being able to get a house at list price, you're able to get seller concessions. A lot of times sellers are paying for closing costs, $5,000, $10,000, $15,000 in closing costs. That is helping you as the buyer keep additional money in your pocket. So not only you're not overpaying for the house, you're paying what the seller's asking for it, and they're giving you some type of concessions, so that can always add to the cash back. Now, the biggest thing about the interest rate, remember when people say, well, it's still $400 higher a month. I get that, but you have to think about financial strategy when it comes to home loans. Something I like to tell all the clients is marry the house and date the rate. Marry the house and date the rate. What do I mean by that? Well, you're going to be in that house permanently a lot longer than you're going to be in that home loan setup. Interest rates will drop back down in the next 12 to 24 months and everybody will refinance. So even if you have a 5% interest rate today and you keep that for 12 or 24 months, it's still going to be a lot cheaper than if you got a 3% interest rate in December and paid $20,000 out of pocket over the list price. Once rates do go back down and you can refinance, you will have a cheaper rate, a cheaper payment. You will get that house at a much more competitive offer by buying in this market versus doing it in one where there was just no inventory at all and sellers were just having the pick of the litter and able to get buyers to come out of pocket, waive the appraisal clause, and spend their hard-earned cash when right now they don't have to. Something else as a buyer that you want to consider is the growth of Dallas. You have to pay attention. There's still a ton of people moving here. There's still a ton of people and business moving here as well. I think rent was up this year in 2022, average in Dallas 17%. Rent is getting way too expensive. I tell everybody, if you're a renter, you're paying a mortgage, you're just not paying your own. That is not a long-term way to create wealth. So as a buyer, even if you have to pay full price for the house, even if you have to take a 5% interest rate today, it is better than doing it 6 months ago where your rate was cheaper, your payment was cheaper, but you were overpaying out of pocket for the house. Now getting a house, getting a structure on the deal, having a place to call your own, potentially getting some tax deductions, paying down the principal, letting the equity build so you are making money on your money. And when you get to a position in 12, 24, maybe even 36 months where the interest rates drop, take that 5% now back down to a 4%, cut that payment down, and therefore you're going to save yourself a lot of money long term. This is a smart move. This is how buyers need to start looking at the market. We are helping more buyers than ever because of the inventory position. We're also helping more buyers get concessions on the contracts to help out with closing costs, buying down the interest rate, buying people out of their lease, and even getting some upgrades on the house. So now is a great time to buy. As you see, it can save you a lot of money, and now you know why. So listen, if you found this video useful, do me a favor, like, comment, and subscribe. Share this with somebody that you know that's maybe renting or looking at home ownership and just needs a second opinion on their financial advice and their strategy. If you want to set up a consultation with me to talk about your financial situation, income, credit, or just have, concerns around can you buy a home or is it the right time, reach out to us. Call us, email us, text us. Let's set up a consultation. No matter what, I am always here to help. Until next time, appreciate the support.